Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, December 9th, 2019. In this video, I'll keep it limited to just coverage of the broad markets. Subscribers, members of the site, I will follow up with a additional commentary, probably another video, just touching on some of the other commodities and asset classes, things we've been watching lately. Been quite a few questions on natural gas. I want to just, again, share my thoughts on that. Crude oil, I did an extensive video today on the energy stocks and crude. I want to touch on MJ and the marijuana stocks quickly, treasury bonds, gold, and those things. Again, I'll cover that in the follow-up video. So as far as the broad markets today, down day, nothing big, 0.3% on SPY as we're looking at here. And then on QQQ, we had about 0.5% drop on the Qs today. A couple things worth noting. On Friday's update, when was this? I posted these charts, screenshotted at 11:52. So Friday morning, about midday. I posted at that point in time. We had run into trendline resistance on the futures. NQ was backtesting the blue up trend line. I'll get to these charts in a second. I want to follow up, but I want to make one thing before we get into the futures. Make a mention of here. I mentioned this in the video today on the energy stocks because they are highly correlated with the broad market. So again, I shared my thoughts there. Some nice looking, potentially bullish setups, quite a few, and very bullish looking setups, but just setups. And again, whether or not they play out likely will depend on what the broad market does. I went over the correlation between the stock market and crude oil, which is extremely tight. And I also went over the divergence between crude oil prices and the energy stocks. So again, if you're a subscriber, you want to check out that video, well worth it, I think. A sector to monitor. Now, in the comments section below Friday's that post on Friday, that midday post, member Preston Peck had mentioned, I want to point this out as I did in that earlier video today, that the history of those bearish PPO crossovers. I've talked about these quite a bit in recent weeks that we've had on SPY and particularly QQQ. What I refer to as clean, high-level bearish PPO crossovers, when you have clean separation. This is Preston's chart here, but the observation that he had was, and a good one, is that quite often you had the bearish crossover there at the high. You had a little correction, then a kickback rally at that point, and you can see it turned the PPO, started to turn it back up after it had crossed over, and then a rejection. That one was a little bit below the line, and we went on to make a marginal new high there. Same thing, we had a bearish PPO crossover right here, somewhere about this point, and then the market pushed up, made a marginal new high. You can see the PPO here back testing from below, and then boom, rejection. And that's often the case. These lines act as often as support and resistance. And I'm referring to the PPO and the PPO signal line. The PPO line's the faster line, and when it crosses below, in this case the purple line, that's the signal line. So again, this is Preston's chart, but nice observation, and there it is. So you had the back test and a rejection so far, and again, that was probably posted on Friday, I believe. That chart there in the comments section. And so going back to where we're at, this is QQQ. Let's strip everything away. Let's take all these annotations off and just add, this is again something I've highlighted in weeks. I like to see these, what I call nice clean separation, these green hills, I call them. You have these trends when you have a bullish trend, and the PPO histogram is simply telling you when the PPO line, the orange line on my chart here, is above the signal line. You can pull that up, you can see it better. And so when it crosses, the histogram goes from green to red, it means you have a bearish crossover. And as I've mentioned, quite a bit lately, all the biggest corrections all year, and there was nothing huge, but some decent corrections, all came, and they were all preceded by the, there it is, the bearish PPO crossover, and we flipped trend, and as I mentioned, we recently had one here. So the fact that the market has gone on to have that little kickback rally, and you can see there's where the PPO, the histogram tells you it back tested right there and then was rejected. And that sell signal, if you will, it's a trend indicator, is still in play right now. And just like these, it could have plenty more to go, as these corrections did back then. So far, really, we had nothing more than the those 60-minute bear flag breakdowns, and I'm trying to recall what I covered on the I think most of that was subscriber content last week, but I'll just touch on that real quick and go back to the 60-minute charts here, zoom in, and I'd highlighted back here what it would have been when we were flagging back early last week that we had bear flag patterns set up. and this was a measured target which was perfectly hit. So you have a bear flag consists of three things: impulsive leg down followed by an area of consolidation on declining volume that takes the shape of a flag. You take the distance to the flagpole there, that impulsive leg down, which it is this blue line, add it to the highest point of the flag before it breaks down, and that gives your measured target. So as I mentioned last week, a perfect tag, and a couple other things happened then. We had on what I call a momentum fueled overshoot, you had that impulsive gap down. There's nothing more impulsive than a gap down. So although you don't see red candles there, it's the same net effect. A line chart would show you going straight down there. But what it did is it came to that 199.80 level I've been harping on for a very long time, which correlates with the 8,200 level on NQ futures. The big support level I said was an important level, at least to me, if and when it breaks. So we didn't break it. We had a test of that, successful test last week, and we rallied from there. But now we've broken this trend line. 60-minute cross, bearish cross on the PPO right there as well. We closed, parked it right about at support there. You can see a 203.68 that previous reaction high right there. And let me take a look at the futures for you real quick. Okay, so just a kind of a follow-up to Friday. I posted at the time. We had NQ back testing this trend line right here, that blew up trend line I've had for a while. There's your bear flag right there. Beautiful, flagging action last week. Or was that the week before? In NQ right there, flag played out, and there was that 8,200 level, as I said that morning. That's where I covered and reversed. It hit, 8,200, hit the support level. Little brief momentum overshoot, closed right back. The 60-minute candles held with closes right on or above 8,200, and we rallied from there. But again, this was Friday noon. Said NQ was back testing dual resistance levels, this minor uptrend line here, as well as that blue uptrend line, and sell signal would come on a break below this wedge. So that was then. Let's just forward to today, and here it is. So I'm going to zoom in a little tighter. There we go. And so what we did is it tried to pop above there several times, but you can see again, this is a 60-minute chart. All these are white. All these little white lines, those are the candlestick shadows or wicks above. So it means on every 60-minute candle, it failed to break out. We closed down. All that matters really are how you close above. We had a slight close there, but then boom, right back down below it. So pretty much, in other words, you can move this line up or down a hair. That was the back test on Friday. We came down, and in today's midday video, I updated, said a break of this level would be bearish for the equity market, because you're going to have we had a second back test today, and then you still had this minor uptrend line and that 83.69-ish support level right there, and boom, we broke it. And look at that nice impulsive leg down. That impulsive nature of the drop so far helps to confirm that breakdown. So that right now has put us on a near-term sell signal. Where we go from here, just eyeballing that chart. Well, 8,200 is still a big level for me. We tested it once. If we get anywhere close to it again, we could take it out. Hard for me to say right now looking at this pattern, but again, now remember, I'm focused right now on, or looking at this point, a 60-minute chart. But let's not forget, come back here to the daily chart I started out with, and we had those more powerful divergences building for a long time here, these negative divergences, and we've just now, up until recently, we didn't have any half-decent sell signals. We started to have an impulsive leg down there, hit that 236 level here on the daily chart, bounced. It was minor support, and again, the bearish PPO sell signal is in play, and that if it's anything close to those previous corrections that we've had when we had those clean high-level bearish PPO crossovers, you're looking at something along these lines. So that would tell me there's a lot more, and that would be, this is still that minimum target I was looking at a couple weeks ago right here, and that would be a back test. You have a minor downtrend line right there, not minor, it's a pretty decent one, but just above it is that 195.37 support, and what I'm zeroing in on there are these these previous highs right here. This is where QQQ broke out. So a bullish scenario would be to come back in, back test these levels, and right now let's just say that is, that's my preferred target. There could certainly be more if we break below it, and if you broke impulsively, that would be pretty bearish. Anything other than just a slight dip below would be a fairly bullish scenario, to see a test of that level or a slight break below followed by a leg up. That would be bullish. The PPO is still in constructive territory. However, if we were to break on through there and smash down impulsively, that's going to be pretty darn bearish. But that would be a failed breakout. Way too early. Let's see. I mean, to get down there, we have seen volatility expand recently. Let me jump over to the VIX. But that's about from where we closed today, about a 4.5% drop. So right now, let's just say that is my near-term pullback target right now, about a 4% drop. We already had the 3% drop the other day. That was the bear flag target, kickback rally. So maybe another 5% downside. And again, that would be a bullish scenario should we do that, and the buyers step in and buy the back test of the breakout and then move on up. Now let's look at something else here. The VIX. As I talked about, the VIX has woken up recently, and it woke up from the support zone. That's where all those corrections over the last year or so have started from. All right, here, this is, of course, you're looking at the VIX, but that was the big drop back last fall in October, down into the December 24th lows right there. That's, again, we're looking at just what the VIX did. VIX rises when the stock market falls. So that started from that level. This one right here started from that level. We fell. In fact, right after we hit it, we were just there for a couple days. Boom. And that was the big, back again at the time, the biggest correction in 2019 that started back in, what was that, about mid-April down there. Next time the VIX fell to that level, we hit it once, rode on it for a couple weeks there, and then late July, boom, there was our second biggest correction in the market, big spike up in the VIX. And again, we fell to it here. We technically didn't hit it till just recently, fell in the middle of the range, and then boom, market woke up, and that was this that 60-minute bear flag breakdown that we had recently. So where do we go from here? Well, look, we hit the level. Last time it was kind of a one and done situation. You can see the VIX went up. The VIX went up here, but I'll say this, after we had started moving up, there was a period right here, zoom in nice and tight, you can see there were two red candles. So we had an initial leg up, not very impulsive. There was one big green impulsive candle, and we had a pullback there. So it is possible that this was so far just, the first leg up. We went down. Today the VIX was up pretty good, about a 16.5% lift in the VIX, considering that we were only about a 0.5% or less drop in the market. I showed you QQQ down about 0.5% and SPY down less. So the VIX is still alive and well here. Hard to say if that's it for the correction. We're going to come back down here and go to new highs, but there's a lot in this chart that tells me that we could have another leg up. So you want to watch this, and it's probably going to coincide. If we get more downside tomorrow, then what you want to look for is a break above the recent highs right here, that high in the VIX from last week. And here's a potential downtrend line. Well, it's actually a valid downtrend line. So we'll watch that. Otherwise, if today's, if those support levels below hold and we don't go down much more, then the VIX probably come back down and could trade at this range for a while here. My convictions aren't super high, but I'm leaning towards that more downside scenario as of now, especially with those 60-minute breakdowns. Again, let's go back to the futures. I showed you NQ already. This is ES, the S&P 500 E-minis. We'll zoom in a little tighter here. What stands out, again, on Friday I had posted midday the back test of this trend line. That's where we were on that post midday Friday right there, and I said that markets were at support, and that was the high. And yes, it never took out that high. It came down, traded there the rest of the day, and through and Sunday night the futures are trading there. And this morning in the charts I'm watching, I posted those same two charts right there. Okay, here they are. This was from this morning. Screenshots were taken about 8:40 a.m. Eastern Time, and the same thing. NQ was back testing that blue level. That's the same level it was back testing on Friday, just below it. And then I added in the video today in the follow-up this afternoon that secondary trend line right there, and so that was it. So basically had us coming down here looking like odds for a pullback were pretty likely. And then let's see, the next one up was, of course, ES, which I just showed you, and that had that trend line there. And so there it was. So we have those sell signals now triggered. It's been a resilient market. Wouldn't be shocking if the market just shrugged this off and moved higher, but sometimes you have to take the technicals for what they are. So near term, it looks like more downside based on this, the fact that that minor support was taken out. And there's really not a whole lot. I can add a level right here, and I will do that for you if you want to, if you're looking at micro levels. As far as swing trading, we do have those bearish PPO crossovers on the daily, but nothing, we don't have any really hard or high probability sell signals for a multi-month swing trade. We'll see what this morphs into. And again, if we have more downside here, I would say a minimum looking for a pullback here to about 3,100 or so on ES right there. That's pretty decent support. If they undercut that, then here's the lows that we had on the bear flag scenario, or not scenario, the bear flag that actually played out. That was it last week. And look for those lows. So if we do continue lower, I think a break of those lows would open the door for a move down to that 3,200 level and quite possibly more. And again, going back to NQ, I need to see 8,200 get taken out before before we can increase the odds, say the odds are good for a move back down here to this target zone. That's about 79, 78, same target zone I've had now for weeks, about 80, 40, 80, 50 to 80, 40 or so. And that correlates with the target zone on QQQ 60-minute chart, which has still not been hit. And we still don't have the sell signals I needed. Back then it was that same level. I wanted to see 199.80 as well as NQ 8,200 get taken out, and then that opens the door for this target zone right here. So there it is. We'll see what happens. We have some near-term sell signals triggered with those minor trend line breaks and the rejections off the 60-minute trend lines there. And I think that's it. Let me just look at my charts, make sure that's all I wanted to cover. Yeah, I should include IWM because the small caps did have that breakout recently on the daily time frame. Here's the IWM 60-minute chart. You can see we also put in a divergent high here. IWM 60-minute chart. Here's your divergence lines, negative divergence at that high. We have a little minor trend line here that we pretty much closed on. This is showing after-hour trades, but we're right on that level, the shaded area there. But that's it. And you can see first support, and I would say a fairly likely target, about 160. There's a big gap to be backfilled right here. In fact, I posted a setup in the trading room today for a backfill on QQQ. Where was it? Right here. Here it is. Earlier today in day trading group. Right there. Looking for about a 1% drop on QQQ right here. Here's a 1-minute chart. I had support here about 204.60 or so, pretty decent. So and showed there's a big old gap down below to be backfilled. And I think most likely look for the large cap indexes to do that. The small caps will probably follow. So again, that's looping back to the 1-minute chart. That was earlier today. We were at 204.53, and you can see we had soon right after I posted that, boom, pretty impulsive drop once that support level broke. A back test, almost a perfect back test of that level right there, and we went up to a high of 204.58 right there, just below that support level, and we've drifted lower since. So we're about better than halfway through right now, and this is the after-hour trades here in white. So that gap is being close to being backfilled so far. Gaps, once entered from above, usually get backfilled. So again, that would be, that was just a day trading op, or I said short-term swing trading op, because it may take well, at this point, obviously, unless something happened in the next couple hours here before the overnight session ends, a day's going to be over. And so again, that's why it's what I call a day trade or a short-term swing trading op. Probably hit that tomorrow on a gap down, I would guess, or somewhere close to after the market open. Okay, so then my point was there, we have the also the gap right there. There's a comparable gap on IWM to be backfilled. So that would be your first logical target. Second target, or support level is about 159.94, and this is the big level here. That's the breakout level, about 157.36. If you recall, IWM broke out recently, back tested, had a slight overshoot, which I said before it happened. If that would be normal to come down in here, and so far. On that aspect, so good, breakout back test, and I said before it happened, if we got it, I may go long, and I decided against it, so I don't have a position in IWM other than a shorted RTY after with that QQQ day trade setup today, but along with the Qs. But that was the bullish scenario, to come back in, back test it, maybe a slight undercut and move up. So right now, that's bullish price action for IWM unless it takes that out. And I believe I had said before, if you are bullish on IWM and you think this breakout will stick, unlike that last one which failed, and then you had a swift move down to the bottom of the price channel. This is your price channel right here. If you think the market's going higher, this is still an objective level to buy, anywhere to around that 159-ish level, but not below that recent cluster. That's where I think if it fails, we probably come back down again to the bottom of the trading range. So as of now, you may get another opportunity if we do backfill that gap or go a little bit lower to buy there. I'm kind of waiting and seeing what happens right now before I add on any index longs. I just don't think the risk reward is very compelling and attractive right now. So I'm just little quick hit and run trades, on the indexes. But again, focusing on better opportunities elsewhere, individual stocks, sectors, commodities with tremendously better risk reward profiles and profit potential too. This market's grinding out, quarter point gains or losses day after day. The VIX again has started to perk up. Volatility has perked up a little bit. You can see here, which makes these bigger candles. It makes the market a little more conducive to swing in day trading, but we're still really, not there yet. So I do these videos to kind of show you, where we might be heading. But again, the opportunities lie, at least right now, elsewhere. But we'll keep an eye on the market. You never know. It's going to wake up sooner or later. Maybe not through the end of the month. December is usually, as closer we get to the holidays, traders go on vacation. And so you get the low volume and sometimes low volatility grinds, but we'll let the charts be our guide. So I'm going to wrap it up here. You have the levels to watch. I should mention before I do, there was, by the way, this breakout right here on IWM. You can see it did occur, and we do have negative divergence right now, and that's one reason that I'm not long, as a swing position in the small caps right now. I don't like breakouts that occur while overbought with negative divergence, because they tend to have, just like this one did here. See the negative divergence down here? Negative divergence, breakout above that range, boom, rejection right back down to the bottom of the trading range. So anyways, that's what I see as of now, and if things change, I'll do another update. Members, again, I'll follow up with some another video on some other commodities and other things we're watching separately. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.